The IRS tasked with enforcing the tax laws is currently facing difficulty with the employee retention credit. The IRS believes that it's received countless ERC claims from businesses that aren't entitled to ERC. Yet the IRS can't audit its way to compliance on this issue. There are far too many claims being submitted for its agents to fully review. The IRS has instead sought to educate and warn businesses to encourage them to avoid claiming the ERC improperly. As part of that effort, the IRS has recently created a simplified process for businesses to withdraw pending meritless ERC claims. That process was described in IRS Notice IR 2023-193 and IRS Fact Sheet 2023-24. But in the notice, the IRS warns that for those who willfully filed fraudulent ERC claims, withdrawing such claims will not protect them from potential criminal investigation and prosecution. This statement certainly appears incongruous in a notice that's otherwise meant to get businesses to come forward. But this is how the law works, and the IRS has to be straightforward about that when rolling out an initiative like this. In Badaracco v. Commissioner, the U.S. Supreme Court held that a taxpayer who submits a fraudulent return but does not purge that fraud by subsequent voluntary disclosure, the fraud was committed and the offense completed when the original return was prepared and filed. What this means is that once a taxpayer files a fraudulent tax return, the fraud is committed at that point. Any potential civil or criminal penalties will attach to that completed act. Subsequent withdrawal of the fraudulent return can't fix the original fraudulent filing. The same rules apply to the IRS's ERC withdrawal initiative. It provides a means to withdraw the improper claim, but withdrawal doesn't protect a taxpayer who willfully filed a fraudulent return from potential fraud penalties.